When the S&P drops 0.75% in a single day, something happens to your brain that has nothing to do with your portfolio balance. You start questioning who you are. Are you the confident investor who bought those growth stocks last month? Or are you the anxious person refreshing your portfolio every 15 minutes? The Nasdaq down 0.85%. The Dow shedding nearly a full percent, and suddenly you're not sure which version of yourself is real. This isn't about money. This is about identity crisis, and it happens to every investor when markets turn red. Right now, as Microsoft surges over 4%, and smaller names like HCWB explode nearly 300% while the broader market bleeds, your brain is performing mental gymnastics. It's trying to reconcile two competing versions of yourself. The disciplined long-term investor you thought you were, and this reactive person who's calculating exit strategies. Here's what makes this psychological trap so vicious. Your identity as an investor isn't just about returns. It's about competence, intelligence, control. When markets drop, they're not just attacking your wealth, they're attacking your self-concept. You start thinking, am I actually good at this? Was my success just luck? Do I belong in these markets? The VIX, sitting at 1794, tells us something crucial. This isn't panic. The fear index shows relative calm. But your identity crisis doesn't care about volatility measures. It cares about the story you tell yourself about who you are. And that story is under assault every time red numbers fill your screen. Most investors never solve this problem. They spend decades bouncing between two identities: the confident buyer in bull markets and the anxious seller when things get rocky. They never develop what psychologists call identity coherence. They never become one consistent person across all market conditions. This identity fragmentation destroys more wealth than any crash ever could. In the year 170 AD, Roman Emperor Marcus Aurelius faced his own identity crisis, not in markets, but in something far more brutal: a plague that killed 5 million people and Germanic tribes, threatening the empire's borders. Everything he thought he knew about being an emperor, about control, about his role in the world, was being tested by forces beyond his influence. Sitting in his tent on the Germanic frontier, watching his soldiers die from disease and his empire strain under pressure, Marcus wrote these words: "You have power over your mind, not outside events. Realize this, and you will find strength." But he went deeper. He understood that identity itself was the trap. In his meditations, he wrote, "Remember that very little disturbs you beyond what you allow to disturb you in your own mind." Marcus wasn't just talking about staying calm. He was revealing something profound about human nature. Our identities are stories we tell ourselves, and we have complete control over which story we choose to believe. Marcus developed what we might call identity independence. He stopped deriving his sense of self from external circumstances. Whether Rome was winning or losing battles, whether the plague was spreading or receding, whether his decisions led to victory or setback, his core identity remained unchanged. He was someone who responded rationally to circumstances beyond his control. This wasn't denial. This wasn't positive thinking. This was a fundamental restructuring of how identity works. The market is testing you right now. Every red number is asking, who are you? The breakpoint comes when you realize something Marcus Aurelius discovered on that battlefield 2,000 years ago. Your identity as an investor has nothing to do with whether markets go up or down today. Path jumping 7%. PIII surging 169%. FIG climbing 15.5%. Meanwhile, the broader market drops. Your brain wants to create a story about what this means about you. Resist that impulse. The Stoic investor develops what I call identity anchoring. Instead of deriving your sense of self from market outcomes, you anchor your identity to your process, your principles, your response to uncertainty. Marcus Aurelius anchored his identity not to Rome's military victories, but to his commitment to wisdom, justice, and rational decision-making regardless of circumstances. Here's the framework that transforms identity crisis into identity strength. First, separate your role from your results. Your role as an investor is to make rational decisions with incomplete information. Your results are what markets decide to do with those decisions. Marcus Aurelius understood his role as emperor was to govern wisely. Whether external events made his reign appear successful or troubled was not within his control. When you check your portfolio and see today's decline, ask yourself, did I make rational decisions based on the information I had? If yes, your identity as a competent investor remains intact, regardless of what the S&P does. Second, define competence internally. The market doesn't grade your intelligence. Your portfolio balance doesn't measure your worth. Competence means following your investment process, managing risk appropriately, and maintaining emotional discipline. These are things you control completely. Marcus Aurelius wrote, "Confine yourself to the present, not because the future doesn't matter, but because your identity exists only in this moment, in your current choices, in your present response to circumstances." Third, embrace what Stoics call the discipline of desire. Stop wanting the market to validate your identity. Stop needing green numbers to feel competent. Stop requiring portfolio growth to feel successful. Want only what you can control. Your research, your decisions, your emotional responses. This is radical. Most investors spend their entire careers seeking external validation. They need bull markets to feel smart, need winning trades to feel competent, need portfolio growth to feel successful. This external dependency creates the identity crisis that destroys long-term wealth building. The Stoic investor wants only rational decision-making. Everything else is what Marcus called, quote, externals. Preferred but not required for identity coherence. Fourth, practice identity rehearsal. Marcus Aurelius would mentally rehearse setbacks, losses, challenges, not to become pessimistic, but to ensure his identity remains stable regardless of circumstances. He wrote, "When you arise in the morning, think of what a precious privilege it is to be alive, to breathe, to think, to enjoy, to love. Then make that day matter. Before markets open, remind yourself who you are. You are someone who makes rational investment decisions. You are someone who maintains discipline during uncertainty. You are someone whose identity doesn't fluctuate with market prices. When Microsoft jumps 4% and you didn't own it, your identity remains unchanged. When the S&P drops and your portfolio follows, your identity remains unchanged. When smaller names explode and you missed the move, your identity remains unchanged. You are not your portfolio performance. You are your response to portfolio performance." Marcus Aurelius spent 8 years on the Germanic frontier. Battles won and lost. Soldiers lived and died. Territories gained and surrendered. Through all of it, his identity remained consistent. He was someone committed to rational leadership regardless of circumstances. The market will test you for decades. Bull runs that make you feel brilliant, crashes that make you question everything, sideways grinding that tests your patience. Through all of it, your identity can remain unchanged. Today's modest decline is practice. The VIX at 1794 suggests this isn't the big test, but every small test prepares you for the moments when identity crisis could cost you everything. You have power over your mind, not outside events. Realize this, and you will find strength. More than strength, you'll find something most investors never discover: identity independence. The ability to remain psychologically consistent regardless of what markets do. This is how wealth gets built across decades, not through perfect market timing or brilliant stock selection, but through identity coherence, through becoming one person across all market conditions, through developing what Marcus Aurelius called an inner citadel that external events cannot breach. The markets will continue testing you. Every day, every trade, every portfolio check is asking, who are you? Now you have the answer Marcus Aurelius discovered 2,000 years ago. You are someone who responds rationally to circumstances beyond your control. The investors who survive every market cycle all share one trait. Next video names it.